Good morning, everyone. Once again, we meet for our weekly update. This is 9 September 2024. Nour, we have a lot of data coming in this month. We keep on repeating that, and we've seen that there are some economical numbers and some data that came out last week and affected the market enormously. We've seen that the dollar index bounced back from the major support, like we bounced back from 100.5 again. This is the second bounce back, and this definitely affected most of the currencies for sure. But the thing that is affecting the market the most, or the thing that is taking all the media, is Nvidia and the losses that Nvidia is suffering from, and how it's affecting the US indices. Is this bleeding is going to continue? Does the market this is just only from Nvidia, or is the market really trying to do a proper correction here?
It is definitely not just from Nvidia, because this is the overall market basically declining. It's not just only one company. But what we've seen last week from multiple data, you would start with the manufacturing PMIs, the services PMIs, even the US jobs report, which was basically a little bit better than expected. However, the revisions that they came in, especially for the past 2 months, they lost 84, or they revised them down. After all the revisions that we've seen, they even revised the previous months, the previous 2 months, by 84,000, if I'm not mistaken. Yes, unemployment rate remained the same, not that big of a deal, but the revisions again is basically continues to support the idea that the Federal Reserve might have to cut rates more than 25 basis points. Last week during the session, at the beginning, we saw at least some sort of like a stabilization, but and then the market continued to decline, whether if it's S&P, NASDAQ, or even Dow Jones. Now the markets are basically, if you look at the Fed Fund futures, markets are pricing in a more than 40% chance that the Fed will basically cut the rates by 50 basis points. And this continues to show that the more evidence that the Federal Reserve might have been too late in cutting rates. So more and more data we will be waiting this week.
The cuts would be like above 25 basis points? This is what the market is pricing currently?
At least 50. So far, we were talking about more than 40%, because at the beginning of last week, the Fed Fund futures were just only pricing in about 25 to 30% a chance of a 50 basis point. Now we're above 40. So the more we get closer to the Federal Reserve decision, the more data we get. But so far it's 25 basis point, but the idea or the chances for 50 basis point, it keeps on increasing every day depending on what we're seeing from at least from the data. So this is still going to be a debate, but regardless, the 50 basis point, it's going to mean some sort of that the Fed basically admitting that they are actually late and they will have to cut rates. And we've seen a couple of Fed members
but it's not super
commenting
comfortable
about that.
The Fed is not super comfortable at the moment with the current data. And we've seen the comments of Jerome Powell regarding that part. So I don't think like the over exaggeration in the market, or maybe cutting much more than expected, or admitting that they were wrong, this will solve any issue. It's not going to solve anything. It's not going to change the fact that we still have data that is not supporting the economy well to recover, to have a proper soft recession as they want. Plus, if we take a look at the numbers of the unemployment and the inflation, the inflation is now, but I mean the unemployment numbers, it wasn't that good, and we've seen it getting revised many times. Anyway, let me jump to another subject here with the effect on the market. So we've looked at oil, and we noticed that oil broke the 72, the triple bottom of August, or since August. We've been maintaining that level. We broke the 72 on US oil, and then we touched around 67.5 or 67.6. And now we're bouncing back to 68, 69, which is kind of a little bit expected. It was a major support, and it's a technical point where the oil is bouncing back. Do you still support the oil as a good hit and run, or a good entry?
Here's the thing. I mean, one of the things that is very kind of interesting, or at least we can talk about when it comes to oil, that this is despite all the news that we heard last week from OPEC Plus. So first of all, remember, it was Libya who were basically out of production, or they had to stop production because of the conflicts with the central bank. OPEC came in and said, okay, we were going to basically increase the production in October. Then Libya found a way to make a deal with the central bank. So the 600,000 is back to the market, some sort of. And then OPEC decided to say, okay, we were going to delay our production increase for 2 months. This means until the end of the year, which goes back to their original plan. However, oil did not actually react in a positive way. And this is one of the signs, or basically what oil is telling us, that there is fears of demand. There is fears of that the demand, basically, or the global growth may be under pressure. And this basically explains why oil is still under pressure. I think, I mean, we might be able to bounce some sort of here, but if oil failed to rally from the current levels, whether you're talking about, Brent 68, or even Brent, 72, or West Texas at 68. This basically keeps telling you that the market, or at least the oil traders, the oil market is they have like some fears about growth, and this should not be basically just over, or to say this is excessive, or to say that this is overestimation. Oil is always right, as long as oil is always right, as the same as when it comes to bonds market too.
And the uncertainty in the market is showing as well in gold, as if you notice, like we've been consolidating between the levels of 2,470 and trying every time to reach the 2,530, but we couldn't reach neither the support nor the resistance. So we're still going in a sideway. Although we've seen the market on the dollar index, we've had a lot of moves, but gold kept on maintaining that level. We couldn't break neither up, neither down. From the other hand, silver a little bit took advantage of this when we hiked up last week, but still, or actually 2 weeks back, but still we couldn't breach the 30.5 until now. We're still at above 27, but still you can see that silver is not trending up as it's supposed to be currently compared to gold.
Gold currently, if you look at the daily chart, is kind of like untradeable, because we are stuck underneath record high, and at the same time we're still holding above at least the 2,470. We tested that multiple times. It looks like gold is kind of building a base, but at the same time it doesn't have all the catalysts that might actually lead to a new record high. So that's why it might be, I mean, traders can actually use this range into like kind of just hit and run also from the support to 2,470 and sell it around maybe record high until we see an actual clear breakout. Silver is the same. I mean, we're not in a trending market, at least, but we're still stuck between $28, $30. We keep just on basically hitting all these levels, and without a proper catalyst, which means either we will get more weaker dollar below the last support that we saw, the 160s. I don't think so. We'll see any major moves, unless if there's like any kind of new tensions in the Middle East, or the war in Ukraine. Something needs to help, or at some point maybe if we get any more negative data.
High and lower low on silver. If you look at the week and even the waves, we have a lower low and lower high. So
the most important one that traders need to keep an eye on is basically the monthly. The monthly is still positive on both, on gold and silver. As long as we don't get any kind of a close below last month, a close when it comes to gold and silver, it is hard to say that the trend has changed into bearish. It's still kind of would be expected to say, or we can say that it's still stable, still bullish, as long as we keep basically holding the levels on the monthly. Yes.
Up to 26 as a low. Okay, let's talk briefly in a minute on the dollar yen. We've seen dollar yen like for this day. We started the week positive. Last week it was negative. We bounced from 147.18 all the way and retouched the levels of 141.76. So we retouched the same levels as we were talking the week before, that these levels are good opportunities for the sellers, because nothing has changed. Dollar is still weak and yen is still supported. When would Bank of Japan interfere again, or when is the expectation of Bank of Japan to interfere again? Because the US is quite clear. We have a lot of news and data
September.
in the US. Yeah, it's kind of everywhere. But Bank of Japan, when is the interference?
I mean, but there's not going to be an intervention, but it might be within the next their next meeting, maybe after the Federal Reserve, I would assume. But we know at least there would be another one rate hike before the end of the year. That's one thing, and I still don't think the carry trade or the unwinding of the carry trade is done or is over, because last week also it was the lowest weekly close for dollar yen since almost about like a year and a half, and we're still holding the one below 144, which was the low or the closing of August 5th. So as long as we're now below 144, this could basically, get. I mean, I don't know if it's allowed to say, but it could get ugly. But I mean, I think now we might be able to go and retest the 144 one more time. Maybe that is a possibility. But as long as we're still below that 144, I still believe the 140 might be possible. Especially if the Federal Reserve also from one side they cut 50 basis point, and on the other hand, if you have the Bank of Japan will increase another 10 basis point, that would be a good catalyst at least for dollar yen to breach the 140 at least.
Perfect. All right. Thank you, Nour, and guys, have a nice week and trade
see you guys next week.
Yep, we'll see you next week.
See ya.